Did you know that the student loan forbearance that you're under the CARES Act, could be the thing stopping you from getting a mortgage or refinancing your current house? Let's talk about it. I would say more than 80% of the population has some form of student loan debt, me included. You see those degrees on the wall? They didn't come cheap. And so the CARES Act created some way to have a forbearance, a break from paying those student loan payments. Comment below if you have student loan debt. Federal student loans, Fannie Mae, I don't remember the other services, but comment below if you also have student loan debt and you were, I guess, grateful that the CARES Act gave you a 6-month break from paying it. So as you may know by now, the coronavirus pandemic has wreaked havoc on the economy, and Congress came up with the CARES Act as a way to stimulate the economy. And it had a lot of provisions to it, but the one that we're talking about today is the student loan forbearance provision, which basically gave federal student loan borrowers a 6-month break from paying their student loan payments. And everybody's like, yay, you don't have to pay my student loan for 6 months. It gave you a break from student loan payments, interest, and from collections. Right? So it seems like it was a good thing for student loan borrowers who don't have to pay for 6 months. But it turns out that Congress giveth and the banks taketh away. Some of these student loan borrowers are now going to the banks and applying for mortgages or applying for refinancing because the interest rates for these are very low right now. And so it's like, okay, this is the best time to do it. Let's apply. But what they're encountering right now when they go to the banks is denied. You do not qualify. Your student loan forbearance has made you ineligible because of a debt to income ratio that they calculated during underwriting. And so student loan borrowers are saying like, wait, what the heck? Like, I got a forbearance and now you're holding it against me? So let me back up and explain kind of what's happening at the banks when these student loan borrowers apply. So when you apply for a mortgage, they decide, okay, this is what you can afford based on how much debt you have out there and what income you make. And so some of these student loan borrowers weren't on a standard repayment plan, where basically it's a higher amount probably than some of their repayment plans. They were on an income-based repayment plan, which is a reduced payment. And so when they apply for these mortgages, it shows that they have these student loan debts and that they're in forbearance. And so there's seemingly no payment. So what bank underwriters have to do, they know that this forbearance will expire. So what they do is calculate what they believe the monthly payment will be for that student loan. And what they do is take a standard repayment monthly payment amount. And they say, hey, we're going to say that your payments will be normally $1,000 if it wasn't in a forbearance. The problem with this is that income-based repayment plan probably would have had them paying $500 and not $1,000. And so it looks like they have more debt than they do. And then the underwriters at the bank are saying, hey, it doesn't look like you can really afford this payment. But if you're like me, you don't take no for an answer on the first try. So what student loan borrowers are finding they have to do is saying, hey, let me show you my statements before the forbearance happened that shows this is what my actual monthly payment was before it shows zero right now. And they also show like several months of it. So you have to prove sometimes like, no, this is what I would have been paying and this is what I would pay in the future. And that way the underwriters can say, okay, your debt to income ratio will be this amount. And they're not basing it on this false, okay, it's $0 or this standard payment amount. And so I would say if you get a no, go back, give them some paperwork, find out how to calculate what your payments would be and say, no, I can afford this. Try again. Another obstacle that some student loan borrowers are hitting are that their student loan servicers are reporting them to the credit bureau as behind. Now, the CARES Act was supposed to say, hey, no, they don't have any payments due for these student loan borrowers. They have no interest and no collections. So in essence, the student loan servicers are not supposed to be reporting the student loan borrowers as delinquent. But I guess sometimes the left hand doesn't know what the right hand is doing, and they're still reporting the people as delinquent, which gives them a negative or derogatory mark on their credit report, which then in turn shows the bank that they don't qualify. And so if you find out that to be the case, they're finding that a lot of people with different servicers, I think Navient is one of them that weren't doing what they were supposed to do. Call them up and say, hey, you need to fix this because it can affect your ability to get a mortgage or to refinance your current mortgage. Congress is talking about having a second stimulus package to stimulate the economy, and student loan forgiveness or forbearance are being talked about. And so we won't know for sure what happens until they actually pass the bill. But you want to make sure that you're ahead of the game in regards to making sure that these provisions don't affect you negatively. You want to basically be able to benefit from the forbearance. You want to benefit from these lower interest rates that are out there for for mortgages or for refinancing. So make sure you stay on top of your finances. Make sure that people are doing what they're supposed to at the banks, at the student loan servicers, and just figure out what you can do. I'm passionate about consumer protection laws. The bigger companies are not going to take advantage of the working average people, and I try to find ways to fight the system when I see that people are being negatively impacted by it. Comment below if you've experienced some negative problems with the student loan services or banks where you feel like, hey, this wasn't right, and tell other people what you might have done, because somebody else might be facing the same problem, and your solution to the problem could also help someone else.